Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, y'all. Ira Epstein with your weekly edition of your agriculture update. And this is for Friday, and this is the 6th of April, 2018. Now remember, I do things different on the weekly update. What I do in the weekly is I will cover the market first on a monthly chart, and then I'll move to all weekly charts instead of the daily shows that I do Monday through Thursday, where I'm only dealing with the daily charts. But over the weekend, it's good to get a perspective on the market. And the one perspective was I was impressed today with soybeans and soy meal. Again, President Trump threatened to put a $100 billion new tariff. That's in addition to the 50 on China. The markets are saying, what else can they do? You know, China only, from what I read, does about 130 billion of imports of American goods a year. We're putting tariffs on 150 billion of their goods if the president goes through with this. So they can't tit for tat. They can put tariffs on everything we send. It's not tit for tat. We'll still have larger tariffs than that. Obviously, the farmer's the one that's nervous about this, getting hurt, and they're right in harm's way. Or are they? The reality of the situation is that there aren't enough soybeans in the world without the U.S. to fit China. Simply, if South America sells all their beans, great. We'll pick up all their clients and other people will be buying the beans from us. So the beans, to a certain degree, have a built-in resiliency because demand will exceed supply without the U.S. I hope I'm making sense to you. Also, I don't think that China wants to just switch its biggest purveyors. Not yet. Brazil's going to be monstrous down the road. No question about it. Argentina's big, but we're the biggest right now. We'll see where that part goes. Pushing around, doing all these threats of tariffs, not good. You see the stock market's down hard. Traders are nervous, and rightly so. But you put it into perspective, and it's like a ball game. First round was we put in, what do we do, 30 billion or so, the steel and aluminum tariffs, then China countered with $3 billion of tariffs on U.S. goods. Now we're up to another $100 billion. So it's going to keep going. It was $50 billion the first round. Now maybe $100 billion more. He's looking into it. It's not healthy for anything. But you stayed up, and that was, to me, important. And the market has stayed on a monthly chart over the 18-month moving average of closes. So if you're a farmer and you're looking at pricing, you can't deny the fact that for this year, most of the year, we've stayed over that, and we've held on to this thrust, coming from a low in 2017 of $9.16 up $1.16. I'm not saying that's good or bad, but it's the reality. When we look at the weekly chart, for the week, the beans did lose 11 cents. Okay, and that's important because that's due probably to the Russian situation. We know that Argentina's hurt. We know their crop's going to be small. We know that people have to buy. But as you're getting these big down days, we're looking to see who's doing the cash buying in the markets. The Chinese came in on these big breaks. Not bad traders. As you can see, I'm going to call that a down thrust, but it's still over the 18-week average. Now, when we look at this chart, a different story starts happening. This is called an outside week, and it's down because you closed lower. A trap sets on an outside day or an outside week if you have an outside week down, if you take out that week's high. And what the theory is, at least my theory on it, is that you capture this whole group of traders caught in here, you'll pop to the upside. The other part is when you get outside weeks, they're often a sign that the market's run out of momentum in that direction, which had been up, and the momentum is turning down. When I put this on a chart with the swing line, and what a swing line does is it helps you to visually see, is a market trending. An uptrend is higher highs, higher lows. A downtrend, lower highs, lower lows. Anything that just has a higher high and a lower low, and I don't care if it's this way or this way, isn't the trend. This is a trend right now. It's got lower highs and certainly a lower low. But that gets bust on this chart if you take out this week's high of 1060.5. So from where you're at, 30 some odd cents away. Not bad. Net 27 cents away. Where did the market hold this week? When you broke down to the 100-week, that's in the green, and the 18-week moving average of closes, those are them right here. That's where the support came in. And we were looking this week because our firm, they're on the floor. They're still trading floors, big option trading, and we were talking, and big commercial buying was taking place down there. In fact, the Chicago Mercantile Exchange hit a record volume this week in one day in options. Unbelievable. In grain. So you can see what's going on. Huge, huge trade. Market did hold that. Now, Bollinger Bands, and you can see where they're at. Bollinger Bands help you understand, is a market about to trend? And if I take you back just like this on the chart, do you notice all the sideways action you're getting? This is like a spring inside of a pipe, and it's coiling itself. Generally, the first challenges of Bollinger Bands fail. Pros take money off the table. I'm not putting momentum on this yet with you. I just want you to see what happens. But when it starts moving itself out, the game is changing. And that's just what happened here. So it wasn't just like you did here, or here you hit it and you backed away. None of that was going on. This market broke out to the upside, and we are now in a retracement of that. But notice, we've also moved to an elevated level. So instead of the band staying here with support, now if the market breaks, where's the next support? I argue right now it's 999.5. Momentum-wise, the momentum in the market hasn't yet turned down. They're both, the blue and the red line, sort of drifting around. Last week's numbers on these were right here, 77 over 76. So I could argue that's good. The week before it was under it. So, and now we're back under it. That's not how you do it. So I wait to see, is it going to start getting that red line pointing like it did here? Is it going to jump up, or is it going to start angling down? And market isn't telling us the story yet. Meal market still has momentum right to the upside. The pattern is higher lows. We have lower highs, and all of a sudden today you have an outside day up. So I think you've put back in the pattern, higher lows, higher highs with momentum up over the key averages, not even weak enough to get down to them like the beans did, much stronger market. In the soy oil, this market is just laying down dead. And for those of you that trade agriculture, it's called a crush spread. And what's really needed right now is the meal is feed. There's plenty of oil, be it canola, palm oil. There's plenty of substitutes for this. It's the feed that they're looking for. And this market not looking good at all. In the corn market, look at how this market's coming up. Doing quite well. Momentum to the upside. Everything bullish until you take out 369. You got higher highs, higher lows. You run into the Bollinger Band. You back away from it, but it's still an uptrend. The wheat market has now found its footing, which is hard to say, but it did it. If you take a look back here, you had a market in a run. And the reason it was running is the hard red winter wheat has got a drought condition. Right now, it got cold, and now it's going to get not so cold, but there's no water coming. And that's keeping the hard red winter wheat well bid. Chicago's now starting to move with it. Look at Minneapolis wheat. You'll see they're all starting to move. There's different grades of wheat. And this market pulled right back to what I call that line in the sand, that 18-week moving average of closes, got its footing there, and now the market's trying to hold. It doesn't have a trend. It's got a higher high and a lower low, and momentum is trying to turn to the upside, and I think it is going to make that turn, but we'll see if it does it or not. Right now, all I could say is neutral. In the cocoa market, this is how markets start topping out. They play around that Bollinger Band, and now you got an outside week down. Until this week's high is taken out, I think that the upside ran out of momentum. I'd be watching very carefully come Sunday night. Does this market start losing the upside momentum it has, turning down? Sugar market, still very much a bear market. Lower highs, lower lows, running sideways to the Bollinger Band, momentum straight pointing down. Coffee market. Look at how this 18-week average of closes has been a determining factor. So if it rallies, I'm still looking for resistance there, but the pattern is pretty clear. It's lower highs, lower lows, bearish, and momentum still pointing down. Cotton market. Cotton today did a pretty cool thing by coming back up as strong as it did. And it had one big day down this week, and then it reversed magically, and again, up 100 points for the week. Higher lows, higher highs. Cotton could get in big trouble if this week's low is taken out next week or the week after. Cannot take out the low of an outside week up in the next 2 weeks is my rule. I came up with it years ago, and I still like it. Cattle market. This is called a vertical price drop. It is not a trend. And I know you're going to tell me I don't know what I'm talking about, and I agree. I probably don't know what I'm talking about. But you've gone straight from 130.52 down to 112. Cattle, hogs, they're difficult markets. I think that my own opinion, I've been around this 45 years. I think the high-frequency boys are in these pits. I think they're thinner traded markets, and when you get these algorithm trades in it, got to watch it. But this became just a directional trade, not a trend. You still have a pattern of a higher high and a lower low. This is the first time we hit the lower Bollinger Band. Momentum is down. We'll see what happens if the market can set up a trend. The hogs are trending, and they're bearish. Lower highs, lower lows. Now they're running under the Bollinger Band. The odds of staying under a Bollinger Band, 5%. When you start putting successive closes, like you've done it now 2 weeks in a row, under it, that leaves me saying that each of those weeks are one of the 5 percentage points. So the logical question is, Ira, what do you do if it goes more than 5 weeks? I punt. That's what I do. It's rare that it happens, but you realize when you're under that band, selling additional units short, market only stays under or over at 5% of the time. I'll let you figure that one out. So you put it all together, you come up with a game plan. And I've got one here for you, my market research. Now, in a nutshell, what my market research does for you is I write 2 updates a day. You get a 20-day trial if you haven't tried it, and you're going to get access to this all-important morning video. That video is not on YouTube. It's not on somebody's website. It's on mine, and you have to be one of my research people in order to get in, one of my subscribers. So I will go through and set you up each morning. I record at 8:30. I wait for the cattle markets to open. That's the last markets. And then I'm capturing all the meats and everything I need. And I'm giving you ideas for the trade day. I back it up by writing during the day a midday report and then an evening report. And I cover everything from the ag markets right onto the metal markets, the oil markets. You'll see it's a wealth of information, but easy. It's not meant to be a book each night. I want you to get through the points. If there's a USDA report coming out, I'm going to talk about it. I'm going to give you the numbers that the trade is looking for, so on and so forth. How do you get it? And by the way, it'll read beautifully on a mobile phone and everything. Give us a call. Go to our website. You can click up here if you're watching me on YouTube, or underneath us on other websites. The carrier says click here for Ira's free information. I'm Ira Epstein. You have a great weekend, and I'll see you Monday.